Well, time to move on then, and let's talk about the cement sector. Earlier this week, the West Bengal government revoked the incentives for cement companies to assess the impact of this development and what's the broad trends in terms of demand as well as pricing. Let's connect with Mr. H.M. Bangur, the chairman at Shree Cement. Hi, Mr. Bangur. Good morning. Always a pleasure, sir, to have you on the show. Thanks a lot for joining in. Well, let's focus first on incentives. For the past year, what were the total incentives, pan-India, that Shree Cement realized in its books?
Shree Cement realized roughly 80 to 100 crore rupees, something like this, as incentive in the books.
All right, for the past year, right?
Right.
Anything came in from West Bengal?
No, in West Bengal, we don't have any unit. And West Bengal government at present was very clear that we will not be giving any incentive. The incentive scheme, which was announced earlier, that has been revoked. But for the last 5 years or so, there was no scheme.
Okay, all right. So no exposure out there, got that. And I think the industry itself was not expecting these incentives to come about. That's why we haven't seen the stocks getting hit. Just a quick question. Do you think that other states as well could start looking at this? That 80 to 100 crores from which government do you get?
Mostly from Rajasthan, little bit from UP and various other places. And I don't think that any government will ever revoke it. West Bengal was not giving it. The scheme was not in force for last 5 years or maybe little more. So it was that they regularized it, I would say.
Okay, all right. And I think if I'm not mistaken, Mr. Bangur, your cement dream itself started in Rajasthan itself. Your first plant was in Rajasthan, right?
Right.
All right. I recall visiting it, a few years ago.
Right.
Well, Mr. Bangur, then let's get straight to business. How are demand trends, in your core markets, which include North as well as East and parts of South? What are the demand trends you have observed? I ask you this because pricing has improved. However, a couple of brokerage notes, like one that came in from Nuvama, they indicate that, in fact, demand was a little bit subdued in May. What are your thoughts? And this onset of early monsoon, has it spoiled your projections a little bit?
Monsoon comes every year. In fact, the good monsoon and early monsoon may disturb for about 10 days, 15 days when the monsoon is there or when the rains are there. But overall, good monsoons means good rural demand, good urban demand. Everybody earns money, the demand will be better. So early monsoon is a good sign. As far as the demand is there, demand is little subdued in May because of the heat wave. And in the first 5 days, because of the uncertainty about war in North India, we knew it little later, but the government had stopped many works and put many embargoes to work in extreme part of Rajasthan like Jaisalmer, some part of Punjab, Himachal. So something was going on, we could understand. But what was it? We were not knowing. Okay. Operation Sindhu, the effect has started earlier. The government has done the blackout exercise. All those were part of the thing which affected demand.
Right. So in light of all of that, Mr. Bangur, what kind of volume growth are you anticipating? I remember last time you said that 8% is likely for FY26. All things considered, do you think you'll manage that? And at what prices?
Volumes of the industry will rise by 7 to 8%. I still maintain it. We will be having lesser volume growth this year. We have increased our prices very much. So our profitability will be better with lesser volume. Our volume growth will be about 2 to 3%, or maybe if the things goes well, 3 to 4%. But our price increase will be maximum in the industry. Now, whatever discounts we are given has been at par with the industry. No extra discount, no lower amount of sales.
So overall revenue growth would be how much? 2 to 3% volume growth realistically. Price growth would be how much?
Price growth will be 6%, 5 to 6%. The revenue growth will be 9% or so.
Okay, all right. So you're going with profitability over pricing, over volumes. Is that correct?
Right. The volumes will come later once the prices are corrected.
Okay, and that would mean your targeted EBITDA per ton on an average for the year will be how much? Since you'll get the benefit of pricing, you've also focused on the cost side. So that should be a firmer EBITDA per ton. Give us a range, sir.
Range, whatever was in the first quarter, I think that should be maintained. But then it is a commodity, we cannot say. But compared to the industry, whatever there was in the first quarter, that will be coming to us.
Okay, but
It is about 1400 rupees.
1400 rupees for the year is something we could work with, right?
Right.
All right, Mr. Bangur, there's another asset that's on the block, and there's been bidding that's been postponed actually by a couple of weeks for the JP Cements asset. I think it's around a 9 million ton unit. Would you be interested?
No, we will be quoting at our price, but as the industry is aggressive, we may not be getting it. We will be quoting what we think will be a fair price. And I am always a conservative.
And so for a million ton, what do you think it's worth?
Now, it is not like that. You have to see how much limestone is there, in which market they are. Secondly, the maximum amount comes not because of the machine capacity, but because they have the market. Here, they don't have the market as they are absent in the market for so long. So their actual sale is little. So I don't think very fancy price should be given.
Okay, sir, but so according to you, what is fancy? Because in the last many years, you have been part of various, you put in a bid, but your bid actually is quite low, sir. That's why inorganic growth is something that you have not pursued. So according to you, if you're doing inorganic growth, what is the EV per ton that it's worth?
No, that I will not say. That more details have to be there. But we are not depending on the inorganic growth. Our organic growth will put us at what I have said is that by 2030, it should be 80 million ton. It will be 80 million ton, maybe a year earlier. Because we have our plans already very much established. Now, within next 6 months, one unit should be coming in Karnataka, 3 million ton clinkerization unit. One should be in Rajasthan, again another 3 million ton. So 3 to 4. So, only about few days back, few months back, our Chhattisgarh unit of grinding unit has started. So we are very much on the line.
Okay, I've got that, sir. But I'll tell you what the problem is. You run the business well. You threw up a lot of cash. The problem is the stock has been underperforming because the street wants to see a little bit more aggression. So fair point. You're saying that organically you want to grow your capacity. Got that. But what about the cash in your books? Do you think that you can reward your shareholders? I think you're sitting, if you could help me out with that number, I think it's around 5,500 crores of net cash in the books. Yeah, maybe a one-time big dividend or buyback. Is that something on your radar? That's something you're discussing with your team?
We are discussing many ways to reward the shareholders, but it will not be fair to reveal it before the board meeting and before the other formalities are there.
Would you, look at deploying this cash, because you're saying that your 80 million tons target comes 1 year in advance? Is there a way you will announce further organic capex as well?
Yes, further organic capex will be continuous, and our policy is to announce it not on the way we think, but when everything is on ground, when the permissions are there, when land is there, when all EC is clear, then only we announce. Because we don't want to announce, front running we will not do.
Ambition-wise speaking, 100 million tons by when, sir?
80 million tons, another 3 years.
80 million tons.
And 100 by when? The century?
Century, maybe for 3 to 4 years more. Because after 80 million tons, 20 million tons is only 5 million tons each year. So it will be 3 years or 4 years maximum.
Okay, and this reward to shareholders, could you give us a time frame? In this year only we'll hear about it?
Yes, only this year, not date.
Okay.
So it will be what, buyback or dividend?
That's what I said. I will not be able to say right now. Because first it has to be clear by board, it has to be clear by so many people.
Okay, let's ask another way. How much cash are you comfortable with on your books? How much do you think is excess right now over and above what you really need?
What we need is, in a profit-making company, the need is not really that much. Only need is that if ever anything comes cheap or if any opportunity is there, we will not like to miss it. And the point is the company is not having any debt. So without debt, we are adding our breakup value of shares will be roughly 28,000 tons, 27,000 tons of assets we have added.
Sure.
So when you say our prices, the prices are basically replacement value prices.
Oh, yeah, sir, the thing is, I think I've been hearing very carefully. The boys are trying to push you very hard to get some sense of the shareholder reward. What is going to be the quantum? When will you come out with it? But I think Mr. Bangur is also keeping his cards close to his chest, at least for now.
Because we are duty bound not to disclose it
Yes.
in this forum.
Yes, yes, yes,
Got it.
absolutely.
Got it,
He's a
Mr.
bridge player, so obviously keeps his cards very, very close to his chest, always.
All right,
Okay.
Mr. Bangur, we appreciate you joining in. We're going to be holding you to some of these numbers. Profitable growth is what you're looking at. EBITDA per ton of close to around 1,400 rupees. Maybe volumes will not be as much, but pricing is something that you're focused on. And we look forward to that reward as well. The street will be waiting by for that. Thanks a lot for joining in and speaking to us here on CNBC TV.
Thank you.